Hello, welcome to Escrow Escapes. This is the real estate stories, market trends, and true tales from the front lines of closings. I am Matthew Halliday, Navy veteran and father of three girls, also a full time real estate agent. Let's get into it.
A week before closing, the buyer's phone lights up. The appraisal came back 11,000 under contract. Movers are scheduled, utilities are on, and suddenly everyone's looking for answers. Welcome to Escrow Escapes. I'm Matthew Halliday. Today I'll walk you through that file, why the value missed the mark, and 3 practical moves that kept the deal alive. Let's break it down. Quick disclaimer before we dig in. This episode is educational, not legal or financial advice. Lenders and local rules vary. Check with your lender, attorney, or local agent for specifics. Okay, now imagine you're on that call. Can you feel the tension? I can. Let's calm it down and be methodical. First, a tight refresher, because knowing what the appraiser does makes the rest actually useful. Appraisers look for comparables, recent closed sales that match the property. They adjust for differences and give an opinion of market value the lender will rely on. Lenders use that number to size the loan. If the appraisal is low, financing math changes fast. More cash required, a price tweak, or in the worst case, the loan doesn't close. Why do appraisals come in low? Short answer, comps, timing, or features the appraiser can't quantify. Thin comparable sales. Maybe only one similar closed sale in the last 6 months can sink a value. Or the market is moving so quickly list prices outrun closed sales. Or the home has upgrades that aren't obvious on paper, like a permitted addition or recent roof, and the appraiser doesn't have that context. Those are our working causes in the file we're about to unpack. Here's the sequence from the real file. Contract signed, inspections done, lender orders appraisal, appraisal returns 11,000 below contract. The lender flags the loan and asks the buyer for more down payment or for the borrower to request a reconsideration. The buyer panics. The seller says no price cut. Understandable. They feel like they're being asked to give money back. Emotions spike. Deadlines loom. That's the pressure cooker. Before we talk tactics, take a breath. Most appraisal gaps are fixable or workable. The question is how to act fast and with facts, not feelings. Here's how the teams who win approach it. Gather evidence, lay out realistic negotiation paths, and use contract tools to buy time. We'll walk each of those out with concrete examples. Lesson 1, build the appraisal packet. The agent on this file immediately pulled 3 closed comps the appraiser hadn't weighted, 2 pending sales, and a near identical floor plan sale 2 blocks away. They made a 1-page memo, MLS IDs, sale dates, sale prices, side-by-side photos, and line item adjustments for differences like finished basements or new roofs. That memo went to the appraiser, the lender, and the seller, fast and factual. A quick checklist for that packet. Include exact MLS IDs, closed dates, photos of the comp's exterior, and any disclosures about concessions or atypical financing. Add permits or receipts for major improvements so the appraiser can see the upgrades were done properly. Remember, this is evidence, not argument. Neat, factual, document heavy. Lesson 2. Practical negotiation paths. When the gap is modest, there are 3 common options. Seller lowers price, buyer puts in more cash, or both split the difference. In our story, the parties did a hybrid, partial price reduction plus a small seller credit, and the buyer added a little to their down payment It wasn't perfect, but it kept underwriting clean and the timeline intact. That's often the real-world win. Less obvious, but worth asking, was whether the lender offered a temporary bridge or a short-term credit while a reappraisal or supplement was processed. Not every lender will, so ask early. Also consider a reinspection if the appraiser missed a permitted addition or critical upgrade. The supplement must be tight, factual, and supported by receipts or permits. Lesson 3, use the contract to buy leverage and time. This file had a short appraisal objection deadline. The buyer's agent filed a formal objection with the lender's required documents, and the seller's agent suggested mediation language to prevent escalation. Those procedural moves kept the conversation calm and gave everyone breathing room. Bottom line, meet your deadlines and document every step in writing. Now, a clear 72-hour playbook you can actually use. First 24 hours, get the full appraisal, pull comps and pendings, and confirm the exact deficiency amount with the lender. Second 24 hours, assemble the market memo and submit it to the appraiser and lender. Propose negotiation scenarios to the seller and outline buyer funding options. Third 24 hours, execute the chosen path. Sign amendments, wire funds, or file a supplement/reappraisal. Fast, factual, and documented. That's your operating mantra. A few traps people fall into. Don't fire off ultimatums. Emotion escalates problems. Don't cherry pick bad comps. Weak comps make your case worse, not better. And whatever you do, follow the lender's submission guidelines. If you don't, your supplement gets bounced. In the file I worked, calm, methodical documentation beat panic every time. 3 quick takeaways to remember. 1. Create a concise, photo-backed comp memo. 2. Offer negotiation paths that preserve financing and timeline. 3. Use contractual objection windows and formal submissions to preserve leverage. Say that into your phone next time the appraisal surprises you. It helps, oddly enough. One practical tip before we go, include an appraisal packet with your offer when you're in a hot or unusual market. 3 likely comps, photos, permits, and a short neighborhood sales memo. If the appraisal becomes an issue, you already have the materials to push a supplement quickly. Send it proactively. Don't wait for the gap. If this episode helped you, subscribe to Escrow Escapes for more rescue stories and practical checklists. The downloadable appraisal checklist is linked in the episode notes. Short, printable, and ready for the next surprise. That's a wrap on this episode of Escrow Escapes. Thanks for listening, and remember, every deal has its bumps. It's how you navigate them that counts. Catch you next time.
Thanks for listening to Escrow Escapes. For more real estate tips, market updates, and behind-the-scenes stories, subscribe wherever you get your podcasts. I am Matthew Halliday. We'll see you on the next closing. Thanks. Have a great day.